Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. Today is October the 8th, 2010, and it's Friday. It's time to look at the markets. Check this out. This is an opportunity you don't want to miss. Okay, today we're going to look at the NASDAQ. This is an awesome opportunity if you've got the stomach for it. Let me show you what I'm looking at here on the NASDAQ chart. I've gone about, I think this is a 9-month chart, and each one of those candlesticks is 1 day. And I'm going to show you the comparison that I see here between the previous move prior to the flash crash and the current move we're seeing right here. There's a lot of information here to cover. It's really good information, so you need to be paying attention to it. First off, there's, setting aside the weak bears out there and the weak bulls, the reality is smart money is betting on this market to go lower. The put-call ratios, the index put-call ratios, you can check that out on the CBOE page, or you can go to our website. It's linked there as well. And if you don't know what that is, we've also got a video at our free website at PerfectStockAlert.com just explaining what that is and how simple it is to read. Basically, you want to note that the higher this number is right here, this 1.79, the higher that is, the more bearish smart money is, the more they expect a pullback. On May 5th, you had a 1.79, and on October the 7th, yesterday, you had a 1.69. Okay, I don't have today's number in yet, so this is just something you kind of pay attention to. It's an indicator you want to watch for at peaks, okay, because this tells you when smart money is betting on that move to the downside as well. So that's important to note. Now, we're going to go over a lot of information here, so just digest it as you can, watch as many times as you need to, okay? Alright, first off, this is the move back here from 2100 level on the NASDAQ. Alright, you'd broken through the uptrend and you sold off right here, and then you made this big move to the upside. Okay, we expected, at this time, we had not seen a series of lower lows, so we were actually expecting this to run up here and then peak. It's be the actual end-all be-all peak of the bounce of March 09. It's a different type of technique you use to pull that off. This one back here, you've already had this series of lower lows. Note back here, you have 2100 here, and 2061 here. So you've already had a series of lower lows. The trend has now shifted, okay? But now you're getting this opportunity. We've talked about this several times as potential to happen, and now it's happening. So what we got here is, back here you had this major run. You had 1, 2, 3, 4, 5, 6, 7 major gaps in that. All right, it was one of the things that I kept pointing to, kept saying, look, you don't get that many gaps that don't get filled. The run up here is bogus. You can take advantage of it by shorting it if you do it right and you leg into it or scale in, or you use options with lots of time on them, whatever you're doing, whatever method you might be using. But you protect yourself, but you be smart about it. You don't just ignore overbought conditions, which you had on the slow stotch up here. You had a major move to the upside here on low volume, lots of gaps, all kinds of sell signals, inverted hammer, shooting stars, whatever you want to call them, here, here, and the first series right here. This first series is important. The first series tells you where the true peak is. Then you have what is the fight, okay? The fight can go on all day. We even told them back here, once they had broken out of this market at this range right here, you didn't even have to trade this market. It was going to have to pull back down no matter what and consolidate upon this previous resistance. It would have to do that. It's a technical rule. So it didn't really matter what she did at this point. You didn't have to trade it. You could short it, just wait, whatever. She was going to pull back, all right? And there's different things you got to note about this move here. Okay, first off, for those of you who are not aware, if you take a sell-off and you draw a line there, all right, to the bottom point, all right, this is, the same thing as you get right here, all right, breakout. That distance can be doubled, and you get the peak of the next high. Basically, it's typically how it works, all right? So you take this point right here, and you stack it up there, and you say about this level, and that's about where you came to, just shy of, all right? Over here is the same way, all right? Come over here, draw a line down there, all right, turn it around. Right, this level right here, which again is where you got that first inverted hammer telling you that's the true end of it. Okay, here you go. And then you can stack that up there and say, okay, that's the best case scenario, which brings you to a double top. We've already talked about this. The market double top is a sell signal, not a buy signal. I don't even care if you break out a little bit higher than the previous 25.35. It won't matter. A double top can be a lower series of highs, an equal series of highs, or a slightly better series of highs. In other words, you could break it a little bit higher and still fail. You don't have any supports here. All right, that's the main problem. Again, 1, 2, 3, 4, 5, 6, 7 gaps in the uptrend here. 1, 2, 3, 4, 5, 6, 7, 8 thus far in the uptrend here. This was bad and easy for me to spot and say this is the peak. This is worse, even easier, and you want to take advantage of this. That's what I'm doing. That's what I did back here. That's what I'm going to do here. I guarantee it. Okay, it's pretty simple to just look at the situation and say, I don't care what you do, you're going to fail. Now let's look at some situations back here. Back here, we were telling you that there's low volume rally, lots of gaps in it. You had the problem with Portugal, Ireland, Italy, Greece, Spain, and everybody that was talking to me at that time on the other side of the trade was saying, the Fed is going to save us, you don't get it, blah, blah, blah. Okay, guess what? The Fed did not save you. Back during this time, people kept saying, it's going up, who cares, just buy and hold, it's easy money, the Fed's give it to you. Guess what? How many of those people got wiped out in the flash crash? A bunch of them, because I know this because they don't talk to us anymore. They're just gone, amazingly. Here we are again. Same rally. Nothing's changed. Technicals are now worse. You still got Portugal, Ireland, Italy, Greece, Spain. You've now got 12 different countries in the middle of a currency war, which puts more pressure on these guys, meaning it's that much harder for them to meet their bills. And now we know it's the U.S. states are going to need to bail out as well. We've also got the elections that are going to put gridlock in there, and the second half of the year is usually weaker than the first half. All of that's weighing on you here that you didn't have back here. And still, people are saying, the Fed's going to save us. Then they're not, okay? At some point, you got to think this through. You're going to rally until people realize there's no such thing as a free lunch. Sooner or later, you're going to pay the piper. So people start getting out. That causes the sell-off, all right? Sooner or later, the Fed can't prop it up forever. He can't just be the only guy out there buying. It doesn't work like that. So the reality is you still get that sell-off, all right? Because it was a low volume rally back here, we told people the sell-off's going to be vicious. When the selling starts, it's going to be fast and just vicious. We did not expect a 1,000-point drop in the Dow Jones Industrial Average in a single day, but that's what we got. It was that bad. This time around, it's worse. Let's take a look at the average volume. This little red line right here, all right, moving along up here, was your average volume. I drew a black line at that point to show at the center of this move here to show the average volume of that time, okay? This is, you'll notice you had some sticks above that line and at that line, very few below it. This is the current volume behind the move. That much weaker, all right? It means there's even less buy pressure behind it. So when the selling starts, there's nothing to absorb the selling. You get that flash crash situation again, okay? Not saying it's going to happen in a single day, 1,000-point drop. I'm just saying that selling is going to be majorly vicious, okay? It's something you've got to take into account. At the same time, you can look over here and say, here's the high point of the previous MACD, okay? Here's the lower high here. This is telling you not to look for a move to the upside, a higher high, okay? And in fact, she's still rolling over. This doesn't have to go any higher than it already has. Telltale signs of weakness are obvious. You have a move up back here, all right, and a bull flag set up here, and then the advance, and you start getting sell signals right there, okay? Then you advance up here, but instead of pulling back down and consolidating at this level, which they should have done right here, right, that would have given them some strength. They could have done that for a while and then advanced. They didn't do that. They advanced and did this rolling top, kind of a pause here, and then these two blue lines indicate that, and then went up to the peak, all right? Here's the previous resistance. Here's your low point. You come up here, all right, you've got the sell signal telling right there, and instead of breaking out, pulling back, and consolidating for an extended period of time, they're not doing that. They're doing this thing again, right here, rolling over and pressing up. They're not going to do any consolidation. That's fine too. It just makes it that much weaker. A couple things to note. Back here you had a bull flag pattern, made the pattern stronger. Here, you don't have it, okay? In this case here, you have more consolidation. Here's a lot more volatility, and the gaps in here are more and bigger. During this time frame right here, where you were just trending up but trying to kind of go flat but with an upward bias, you had the dip below the slow stotch below the 80 line and bounce back up there, refusing to sell off. Same situation right here. Right here, all right, dips below, jumps right back up there, okay? This is identical, both situations. There's no reason to do anything with this trade, anything different than you did back here. Only in this case, based on the technicals, you do it that much more. You totally load up. This market's gonna tank. big time. In conclusion, everything I said back here was accurate. The chart never lies. Chart's proven right again. Every one of these gaps will fill. Every one of these gaps will fill. Every one of these gaps has been filled. Every one of these gaps will fill. If you've not been to our free website at perfectstockalert.com, it's right there. It's 100% free. All we ask in return, please refer a friend. You can visit our video chart school section right here to get information regarding the put call ratio that we're talking about. There's a video in there explaining what that is. There's also a section for the Perfect Stock Alert method, recorded videos, series of videos there to show you the exact method from step 1 to step 2 to step 3, what we do and how we do it to analyze markets. Okay, it's all good information there. Hope to see you all there. And on Monday morning, I hope to see you all in our morning market activity, our live chat room. It's a lot of good information there being shared with everybody and a lot of smart traders there. So God bless, take care, enjoy your weekend, and be safe. Above all, be safe. Okay, a quick look at our disclaimer. The disclaimer, read it and weep. Okay, I'd like to thank everybody for referring their friends and sharing our videos online. We appreciate that support. If you'd like to further support us, please go ahead and subscribe to our YouTube channel. We'd appreciate that as well. It's free and we appreciate it. God bless. Take care.